Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk A little bit about the huge news dump, the data dump that occurred earlier today. I mean, it was absolute. They dumped so much data on the markets. I don't think I've ever seen a Wednesday like this. We've got retail sales from 2 months. We've got PPI for 2 months, existing home sales, MBA mortgage rates, WTI crude oil. I mean, we could sit here and talk for 3 hours about the news. I'm just going to touch on what I believe is going to be the key market drivers moving forward. We've got really a budding situation with Iran. We're going to look at some poly market odds. Right now, what you're seeing in the markets is a lot of people believe strikes against Iran from the United States is imminent. We're going to be watching that as well. Also, we've got to take a good look at maybe a number that we haven't really ever looked at, and that's going to be gasoline inventories. I want to show you the seasonality of gasoline, really what drives the demand side for WTI crude oil, but also maybe a situation that's preparing for an international conflict. We've got a lot of existing gasoline storage. I'm very, very surprised about that. As far as what we can also say about the markets, we've got the Fed's cash carry talking about backing Jay Powell up after the big DOJ investigation announcement. We've got to talk about Neil Kashkari for a minute. Interesting. It doesn't look like he's going to be a Fed chair anytime soon. Sort of a person in that boardroom maybe that'll never be in there again. And I'm going to show you a couple things on Neil's profile and also Neil's comments that really shook the markets up a little bit. A nice observation too, I'm going to point out. It's probably very controversial, but we're going to get there. And then also your complete market scan. I mean, we're looking at everything. The only thing I really haven't dug into today too much was cryptocurrencies, but I'll be darned if Bitcoin's not right back near 100,000. We talked about that, needing to get back to that 100,000 to really restore faith in the bullish side of this market. Bitcoin up about 2%, 1.75%. Dogecoin struggling, Shiba struggling, Ether is up as well, right around 33.50. Interesting stuff. I mean, you're in for great trading no matter really what you're trading right now. US dollar sort of rotating right around scratch, but I'm not overly worried about the dollar yet. We're going to get our moves out of the dollar, but there's a lot of things that have to happen first before we get these big moves. So remember, all of these markets and much, much more are available over at switchmarkets.com. If you want to trade or if you need a new broker, or if you're looking at a broker, take a look at Switch. I always say go to the Trustpilot reviews, read about other folks' experiences. But truly, I mean, the lineup is robust. Thousands of global markets, tight spreads, zero commission accounts. We're going to talk a little bit about leverage right now. And it's very, very important that we understand exactly what leverage is and how it can be adjusted as market conditions sort of dictate. So let's go ahead and just take a look at this really briefly. You'll notice this is my email inbox. I got a message from Switch earlier today that said, please be advised that the margin requirement for the XAG USD silver will be adjusted from 0.2% to 2% in response to prevailing market conditions. Very, very important that you understand that. This should have went out to you if you are a Switch Markets client. And also, it will be showing up on your MT5 platform. It's going to be right underneath. You just go click Mailbox down here at the bottom. My picture's covering it. But go ahead and click Mailbox, and it'll go ahead and it's going to bring up all these news events that are sent to your mail. So, like for instance, you got a reminder that we got a live trading webinar tomorrow on the Orb. Don't be late. Also, those margin adjustments should be showing up in your inbox if they haven't already. So, your MT5 platform, that mailbox is a big time resource. You always want to be juiced in because that's going to give you live updates directly from the broker on things that are very important. So beware, the margins for silver have changed. Why have they changed? Because volatility is absolutely off the chart. You can see right here. Here is really the chart that we've been looking at for a long time. I'm going to leave it up until things die down a little bit. But realistically, boy, our cup with handle, we'll talk about this a little bit later. Our cup with handle on gold on the daily is an absolute banger to the top side. The cup with handle on silver was one we really liked, and right now we took out that $90 level without much hesitation. I knew a guy that talked about that yesterday. Don't hang your hat on 90. Trying to sell 90s as a key level. It just isn't really a strong enough zone. But we do have an idea of what is a strong enough zone. I'm going to point those out a little bit later in the webcast as well. So I want to welcome everybody to the room. I wanted to get started with some of that stuff. I think it's all really, really, really important, and it's something that we've got to be juiced into. So good to see everybody back in YouTube land. Kanar, good to see you. Kanar, yes, sir. Let me see. Yes, sir. What a day. I executed a killer sell on the Japanese yen during the London session. When a key level breaks, it's money in the bank. Yes, sir. And that's, we talked about the key level in silver was like 40, was like 50. We knew once we cracked 50, we were going high. I didn't think we were going this high this fast. I'm not going to say that I knew it. A lot of people out there saying, I knew it. No, you didn't. Nobody knew this. So what we have going for silver is really truly a unique situation and one that we are watching closely. You probably already guessed what I want to do. I want to buy any pullback we can get. So we're going to look at those shorter time frames, maybe a 4 hour. Would love a daily pullback in silver. I think that would be fantastic. I just don't know that we're going to get it given our geopolitical situation. Tina Shane, good to see you. Tina, welcome. Hello. Stephen Market, Trump Shane 28. I'm not getting on anybody's ticket for politics. You couldn't pay me enough to get into politics. That's funny, too, because a lot of people get into politics for the money. And after seeing all this government fraud, all this waste and abuse that we've seen really for the last year be exposed, there must be a lot of money in politics. Maybe we should get into politics. Stop trading. Stop looking at the screen. Go run for office somewhere. Steven, why was 90 so easy to break for silver? Just historical behavior? No, that's the beauty of this, Steven. It wasn't historical behavior. This was a level that had never been touched. And if you remember about what we were talking about yesterday about don't hang your hat on 90, don't hang your hat on 90, don't hang. And everybody's going, why, Shane? Isn't 90 the same as 80? And I'd say, no, not really. You know, call me superstitious. 80 is an even number. I really put more emphasis on even round numbers. Honestly, that's the secret. That's why I'm not really too excited about 7,000 in the S&P 500. But that's a little bit different because the S&P is on thousands. It's a bigger range. So 7,000, clearly the $1,000 round levels are huge as opposed to maybe a $10 round level. I know that sounds esoteric and really strange, but the way that I look at the market's always been in terms of quarters. When it comes to big round number, it's about quarters. It's about 0, 25, 50, 75, and 100. And that goes back really to the beginning of markets, quarters. Think in terms of quarters, at least I do. That can probably get you somewhere down the line. What's the next quarter? 92.50. 92.50, 95, 97.50, 100. We're going to 100. I can't say guarantee, but we're going to 100. Whether it happens now, whether it happens next year, I don't know. But I think that we've come a long way to not test 100. So we're going to be looking at 100. That's for sure and certain there, Stephen. 90 was just a pass-through. We're going to look at it on short time frames, but it just wasn't. It wasn't the type of level that you need to have. What I'm saying is you couldn't have that much confidence in it in the face of an uptrend like this, given the market drivers. It was a good way to lose money, and it faked out a lot of retail shorts. It really did. Good to see everybody in the How to Trade community. We've got Bobby Bob. Good to see you. Andrea Garwell, Tuku, Lita. Always a pleasure, guys. Gordon Williams. All right, guys, let's go ahead and dive right into what we need to cover today. There is a lot of things. I'm going to move relatively briskly. We're not going to spend a ton of time on the numbers because there is just way too many of them. Let's start off with a couple of trade updates. If you have any markets you'd like me to cover, go ahead and do just that. We're going to go ahead and sample some of the hot movers and shakers today. Clearly it's silver, but don't ignore Bitcoin either. 97, printing 97. Big time level. Okay, here's a trade update. This is one that I put out a couple days back on the Euro USD. I really like this pair right now because it's actually moving. We had an active for opening week of the trading year for the Euro USD, so we did very well bidding that 38% level. That level's long since gone. We ignored 50%, right around 116.50. We probably could have traded that, but now we're looking at the 62% weekly level, which is down there right around 116.12. So let's go ahead and take a look at our Fibonacci retracements. You've got a spike low here. You've got a spike high here. You've got a nice big 2-week bearish move, and now we've got the back end of that golden zone. Bollinger midpoint right around 116.19, 62%. The back end of that Fibonacci golden zone right around 116.12. So our entry was right in the dead center of this little zone right here. I'm looking for a test of this maybe a little bit later this week. We're printing 116.44s right now. I think we have an opportunity potentially to get in on that bid. I'm very, very interested in always trading 38% and 62%. We passed on the gold trade yesterday, the 62% level on that 5-minute scalp that we were executing after CPI. We got smoked. We didn't get smoked. We got a little bit of bounce, but 38% didn't work for us. We didn't execute 62%. 62% turned out to be sort of your intraday bottom in the gold market. So I love 38. I love 62. I don't typically trade 50, but I also really like 78%. We just don't get as many shots at 78%, especially in a market that's moving this way. I still have a bullish bias toward the Euro USD. We'll wait and see how this stuff plays out. That's for sure. Let's see the secondary trade update we have. This is one that I put out just a little while ago. I know a little while ago is like an hour, probably an hour and a half. This is one that my eyes lit up when I saw the pullback today in the US 100 sector. Now, this is for the US 100 CFD. If you are trading on the MT5 platform, you're going to be looking for that US Tech CFD. We'll go ahead and show you exactly where that is right now. Over on your MT5, US Tech, you're just going to drag and drop, and you're going to have a look here. Now, the pricing is going to be be a little bit different. There's no question about it. It's right now you're printing about 25,310, and then what is our US 100 right now? 25,316. So it's relatively close, but do understand that discrepancy if you're trading on your MT5 via switch. US Tech is the CFD that you have pointed towards your Nasdaq 100. Now, as far as what can you really be looking at here to try to get some execution going, well, the level really won't change. Now, the price is probably going to behave a little bit different, but unfortunately, across all markets, the numbers aren't exactly the same. What's important is the zone. Now, the zone is going to be right down around 25,000. This is an interesting dynamic because we sort of are looking to bid right above that 25,000 level and the bottom of our bullish triangle. This is our bullish pennant. You've got the weekly, it's more of an ascending triangle, really, but on a monthly, it definitely is a bullish pennant. This right here is a real beautiful level. Now, what makes this level unique is what? It's my 13-week EMA down there at 25,149. That's absolutely huge. Absolutely huge. So 25,150, 25,000. We're looking for some bidders to step up and bid this market that's been bullish for a long time. So if I'm thinking US Tech, I'm thinking US 100. I really like that 25,000 level, and then right up to my 13-week EMA, right around 25,150-ish, maybe a 25,175 bid, I do believe was the key level that we have down there. Looking for about a 300 pip pop, 400 pip pop there. Pip pop, say that 5 times fast. But definitely, I want to see exactly what happens here. Now, the beauty of this trade is that we're going to know a lot of things when we test this 25 level. If the bidders have left the building, we need to start thinking about a correction, a Q1 correction. That all-time high is locked in. We've compressed around 25,000 for several months. If you do get that sell-off that really breaks that downside target, the downside of that pennant, then we've got to step back to our monthly charts and start looking at some retracement levels to try to get in on the macro trend, but be a little more cautious doing so. Personally, I see that as just a rock-solid zone to be a bidder. I'm very, very interested in how this thing comes to pass here in the next several days. Right now, we're printing 25,325. We are not very far at all from that zone. I love it. I love that zone. I'm smiling. I've been waiting to dive into equities, and I'm very, very I would say optimistic about the potential there. Let's see. We do have a few questions here in the live chat. T. Marina, hi Shane. Hi all. Good to see you, T. Always a pleasure. Love it when everybody joins up. Pretty good session. We've got a lot of trades coming our way. A lot of news too. We're going to have to get to it. Let me see. Tina, I entered the 46.09 of gold as your scalping bid price yesterday. I got in the US 500 of your trade ideas. I'm trying to think of where the US 500 was. I'm looking sort of through my live my trade analysis on the website. I don't doubt it. I think that the US 500 was probably in here somewhere. We put out so many of these things that you definitely 4,500 back in play for gold. Yeah, I'm not seeing anything on the US 500 that's written. It must have been during a live stream. One thing that I do want to address, and it has been brought to my attention again by our back office team. If you are following us on Facebook, if you're doing anything on Facebook or on Meta, I am not personally on Meta. If somebody's out there giving trade ideas and they're putting Shane Vernier's name on them, it is a false. Do not talk to them. Do not give them any money because it is not me. I am not on Meta. I am on X at ShaneV_trader, and I post all of my written trade ideas here on the How to Trade website. So if you're getting information from Meta, from somebody that says they're Shane Vernier, market analyst, it is not me. Last time I checked, there was 4 or 5 of those fake accounts. A lot of them had 1,500 to 2,000 followers. You need to make sure that you don't follow those. I absolutely want. Oh, the Fibonacci extensions that we marked. Yeah, the Fibonacci extensions from the weekly preview. That's interesting. Let's go ahead and pull that up right now, and I'm going to go ahead and show you where we're at. If you listen to the weekly preview, what we were really talking about was sort of a top-side target if we do break 7,000. And you can see what's happened right here as we tested 7,000 yesterday almost perfectly, 66,997, and then there was your big sell-off. So realistically, I probably should have put a trade idea down that addressed selling right in front of 7,000. I did not do that. We were anticipating a break on the Fibonacci extensions of 7,000. I'm pretty sure I covered that in that video, but I do talk fast, Tina, so if there was confusion there, my apologies. But go back and check the video out again. I'm pretty sure that we were either looking at a retracement sequence from down in here somewhere, or we were talking maybe after price breaks 7,000. But I've made mistakes in the past. Typically, 7,000 we identified that correctly as being the catalyst for two-way action. That's exactly what happened here. They step up and sold that. The Fibonacci extensions are basically topside targets if you do break 7,000. I thought I was pretty clear about that, but maybe I wasn't. So in the future, I'll do a little bit better. We wanted to introduce the Fibonacci expansion tool or extension tool because I've got a lot of requests about it. A lot of folks have wanted to know, Shane, your Fibonacci retracements, what about expansions or extensions? And I said, well, I'm not really a big fan of extensions. A lot of the reason why is because it's very almost impossible to measure market follow through. What you're trying to do with a trade like this, with these topside targets, is sort of establish, okay, if price does break out above 7,000, which I believe we're going above 7,000, I believe we're going above 50,000 in the Dow, and for the US 100, you're probably going back over 27.5 eventually. What happens in the short term, I really can't say. A lot of sentiment here is weighing from the possible U.S. incursion into Iran that we're going to cover right now. So let me see from the Smart Market email. Yeah, we did. Yeah, okay. I entered the retracement at 69.70. Yeah, 69.70. Yeah, clearly right up there. We've definitely broken down. So I probably would be looking for a stop. I would be looking to stop myself out at this point just because the sell-off is significant. And the reason why is because we're dealing with a ton of economic data, but that's not really it. I mean, it's U.S. intervention in Iran. That's what's driving your negative sentiment right now. Potentially, if you're interested, January's range, your Fibonacci retracements would be something like this: spike low, spike high, and you've sort of hit right at 62%. So a pro tip as far as what you're looking at here, if this area, this 62% retracement of January's range does not hold, you need to vacate. Because odds are you're going to trade even lower and then potentially go down there. So a couple of things when you're faced with this situation that's a potentially a losing trade, a couple of things that we need to focus on. Number one, don't add to the losing position. A lot of folks will sit there and say, okay, well, we loved it right up here. I'm still not seeing where we got 69.70 from. I'll go down. This is a daily chart. Maybe it was a weekly, something like that. 69.70 would have been the bid. Was it an intraday, a 30-minute? I mean, I'll have to look at it. Oh, it was right there, wasn't it? Right from this spike low. Boom, boom. No, not even that works. I'm going to go back and watch the video, see exactly what happened there. In any case, 62%, 68.90, or excuse me, 68. Is that where we're at? 68.90, 68.90. If that goes, you got to get out. So I'd be watching the rest of this session relatively closely. If the bottom is not in for the US 500, then you could get chased, and this market could absolutely fall away to 68.71. And if that goes, then you're down there to 68.25. It's definitely possible. I would expect a rebound from this zone, but I wouldn't buy any more just yet. So that's the way that I read it right now. Remember, trade management's everything, 1% to 3% on any given trade. You do not want to let your clock get cleaned on this. That's for sure. So aggressive trade, I like it. If we do break 7,000, though, I do believe that you are going up to these Fibonacci expansion levels. But as far as which one I like best, I like that one best. When we get there, I really couldn't tell you. Don't know. We got to wait for this to play out. So something like that, sort of a tough trade. That's for darn sure. All right, everybody. Week 2, 2026. Iran and Powell was Monday. That was definitely the big market mover. Tuesday was CPI. Today was US PPI and retail sales, and that wasn't the half of it. There was a ton of numbers out today. Thursday is going to be Philly Fed initial jobless claims, and then Friday is no donation Friday. Expect the action to quiet down a little bit as we get into later in the week. We just came off a CPI and PPI. That's a big deal, and we've got a situation where participation is likely to slow down. Unless the Iran situation really kicks up, which it may, we definitely could see volatility, maybe intraday participation dry up a little bit towards the end of the week, but I wouldn't bet on it with this news cycle. Still, though, the amount of numbers that we had out today was absolutely huge. You're absolutely welcome, Tina. I hope that helps. News of the day. Let's see. These are peripheral events in my view. I don't know that these are driving the market much at all, but they are worth looking at. NBA 30-year mortgage rates are down week over week. Interesting. That prime rate down around 6%. You'll notice applications through the roof. Don't read too much into that. A lot of people are already talking economic boom. I don't know that we're there yet, but 28.5%. Why would you think week over week all those applications went up? It's because it's the new year. This is the year we're going to buy a house. So what you do is you start applying for mortgages and pre-approvals and things, and that spikes the number. So this right here, this is what I call a fugazi. That's a fake number. We'll see if that holds next week. I don't believe that it will. Let's see. Existing home sales were up 4.35 million, shattered expectations and the previous release. This is a 5% bump from December. So that's sort of interesting, sort of corresponds with maybe those rate cuts that we've seen over the course of 2025. It's already 2026. Those rate cuts starting to kick in towards the end of the year, and existing home sales coming off the board for December. Interesting. Very interesting. I wouldn't have guessed that, but a nice uptick. Crude oil inventories. This is the big one that I wanted to really illustrate a decent point before we talk about U.S. oil. U.S. oil is broken out to the top side. It's all about Iran right now. We'll get to that shortly. Crude oil inventories come out at 3.391 million. That's a significant build. Now, in the winter months, probably not too far out of the ordinary, but we were expecting a draw on supply, and we didn't see it. Now, for whatever reason, I mean, I don't know why they're expecting big draws on supplies. Maybe New Year's travel. I have no idea. For me, I don't believe those numbers. Anybody anticipating a draw this time of year better have a very good reason. And probably the idea there was we're having more refinement. Gasoline inventories are really at high levels, and I want to show that. They're up at about 8.977 million for the week. That was almost double your expectations and above the previous release. So basically what happened was the analysts sat down and they said, well, we expect a draw on supply because refinement has picked up. Essentially, that's what they said, and they were completely wrong. So what you have here is an interesting chart. This is the United States gasoline stocks trade. We haven't ever talked about trading gasoline. One of the first things that I was taught about gasoline futures was don't trade it. And believe me, I mean, I'm not kidding you. That was a lesson learned from two guys that had made millions of dollars in the market. My uncle was a bona fide Millie guy, and then the first trading partner we had, one of the first trading partners we had in the group was a pit guy that was making $1 million a year back in the crude oil pits in the 90s, early 90s, right? And they both told me the same thing. I said, well, what about gasoline? Gasoline's a great futures product to trade. There's a lot of volatility there. They both said in unison, don't trade gasoline. So I think that they both lost significant amounts of money trying to trade gasoline. And I said, well, that's enough for me. I don't need to go anywhere near it. Now, that doesn't mean you can't monitor gasoline. And I do some of that. I monitor heating oil and gasoline depending on the time of the year to give me an idea of what's happening or could potentially happen in the crude oil market. I absolutely believe that that's possible. That is very, very complex, and I think it falls sort of far beyond the scope of our live stream here today. Basic idea was this. You would have your screen up. Okay, you would have heating oil here, which essentially is diesel, but it's used in furnaces, especially on the East Coast. You'd have heating oil here, gasoline here, crude oil here. And you would try to figure out which one's moving the most and establish a correlation. In the summertime, we would be watching gasoline. Gasoline futures go way up. Typically, that's going to drag crude oil a little bit. In the wintertime, we would watch heating oil. Heating oil goes a little bit up. That's going to drag crude oil up a little bit. That was the basic idea. Those correlations are extremely difficult to read accurately day in and day out, and you need a lot of experience to do it. So I've shied away from a lot of those concepts, but I was there, and I did it for a couple of years, and I eventually just started treating crude oil as its own animal, maybe to my detriment. I'm not necessarily certain. All right, but what's important about today's gasoline numbers is this. Your gasoline stocks change. This is big. Now, this is right here is a 5-year chart, and you can see these are weekly figures, right? Well, this establishes seasonality. You'll notice that rising inventories typically happen in the winter months. Now, of course, that's an outlier in June. There's always going to be outliers, but basically this formation is what we're looking for, and you'll notice December, okay, that's great. Here's another outlier in the middle of the year, and then right in here, again, winter months, you're getting the rise there. Couple outliers there. That's September. That's an outlier. But right here, pretty consistent in those winter months. This really sort of serves to be your bearish driver for WTI crude oil. Gasoline inventories typically rise in the winter. Why? Because the demand's not there. You're not burning as much gasoline. The summertime travel here in the Northern Hemisphere is not online. Most people in the wintertime, or not most people, but a lot of people, just sort of hunker down. They do what I'm doing. They get in front of the screens. They go back to work. They're not driving across country. They're not taking the wife and kids or the husband and kids or anybody, the family, on a trip across the country. So that's the basic idea here. The weather sort of shuts down that gasoline demand, and you get rising inventories in the wintertime. And, of course, there's always outliers. But these are the trends. This normal distribution really is what we're looking for when I harp on seasonality for crude oil. Now, January, where are we at right now? January 2026. Take a look at that build. That's a big one. That's a big one. That's far bigger than we saw really going back last year. No question about it. So what you have here is more gasoline. Now, a lot of folks can believe that maybe that's the sort of the preamble to stockpiling gasoline, maybe some sort of military incursion somewhere, especially if large oil stocks go offline for whatever reason. You've still got that gasoline to fall back on, which is really what crude oil is for. It's for refining gasoline and diesel. So there's a lot going on this chart. This is one that I'm going to be watching. This is fantastic stuff. A big build typically is going to lead to those lower gas prices, right? And it's also going to lead maybe to a lower price in WTI crude. Now, that's not what we've seen today. That's not what we've seen. U.S. oil right here, you can see there's the big rally. The key levels at 60. We talked about the scalp there. It was only good for about 40 ticks, 42 ticks. We were looking for a 75-cent pullback. Did not get it. So that did not really work very well at all. But now you're in an opportunity potentially to get on the bid side of this. I'm not excited about it. I'm really not excited about bidding this market. And it's one of those things where I'll do it on a 30-minute chart intraday, and we'll scalp to the long on intraday trading. But what we're not going to do is take a position. So this is a good look at your 30-minute chart today for U.S. oil. This goes back to this morning, but this would be probably right after your London open. No probablys about it. There's the big jump in U.S. oil once again, OPEC, Iran, all of it. And there's your 30-minute chart. So you really had that sort of peak high right around, 8 a.m. Eastern. You came right down. 38% has been nearly bulletproof throughout the U.S. session. It really has been. So I would be looking at 6150s as being potential intraday scalps. I have no problem taking that long for 5 to 8 ticks, 5 to 8 pips. No problem at all. I'll do it. Your spread right now is 0.01 pips on this U.S. oil contract. I mean, that's fantastic. It's very, very tight. Let's go ahead and just pull up our trading dome, our depth of market here, and sort of give you a look. But there it is. Very, very tight. We call that efficient. That's very efficient. That is a tight spread. That's almost like trading a futures contract right now. That's great. You can scalp that for a few pips. No question about it. So if you're looking for 5 to 8 pips bounce off of, say, 61.57, that's great. But what I would really stress everybody to understand is this WTI market during the U.S. session. You can see right there where your news is, right in here, right? What are you going to do with regards to, is this a range day or a trend day? Now, we all understand that U.S. oil is up over 1%. Theoretically, that's a trend. All right, well, you're up 1%, Shane. You're trending higher. And I go, yeah, maybe, whatever. Not during the U.S. session. It's not. That is a whipsaw absolute mess. That is a 5 Tylenol headache right there. That is up. That's compression. That's the big wipeout. You had the big spike of the spike on the news event, which was your your inventories, your EIA inventories numbers. And then you just sort of flattened out. You rallied up to 62, failed there, sold down to 79. So given this market structure, now think hard. Put your thinking cap on. Given this market structure, what is the play here for WTI crude late in the day? What's the play? It's got to be rotation. Your range was established during the overnight, which would be during the London session. I mean, those are epic moves. That's a big time move. Lows right around 60. You go right up there to 62. That's a $2 move. That's great. Since then, we're trading in the upper quartile, so you've got a couple of options. Number one, you could play rotation. I would play it to the bull. I'd be looking at that 38% level really closely. But this double top up here, you may be able to sell up there right around 62 again for a scalp. 62.05, maybe 62.09. The thing to be very careful about is when we go into that about an hour from now, that 2:30 p.m. Eastern, understand that starting at about 2:25, about 55 minutes from now, you're going to see a flood of participation into the crude oil markets. That's a traditional pit close. You're going to see a big flurry of volume, and then the volume's sort of going to die off as we get on later into the day. So what I would be very careful with, if you're going to play rotation and sell from sort of this double top area, looking for reversion back down somewhere maybe right around 61.75, be very careful doing that, because if a breakout is coming and you do see a break above 62.12, 62.15, You're probably going to get it about 55 minutes from now, 5 minutes left in the traditional NYMEX pit session. That's when crude oil moves typically. Now, for me, I like the long side of this market. If I was going to bid it, I'd be bidding down in there. That's a look inside of the intraday thought process. One thing that I will do right now, and we do need to do it, is pull up a monthly. This is a significant pullback here. This really is. It's a significant pullback. So let's go ahead. Let's get rid of everything. Okay, it gets confusing. I know. I talk fast. We confuse a lot of folks. We try to help more than we confuse, but, spike high there, spike low. What do you got right up there? That's my short. You say, Shane, where do you want to go short this market? Right there. 63, 67, 63, 60. I've got a 13-month EMA right there at 64.06. We've got about a 40 pip zone there, 63. I don't know. I would just probably take it up to 50 pips, 63, 50-ish, all the way up to probably 64 and a quarter. Likely to get some good compression here. I would love a nice short scalp from there. That would be absolutely fantastic. Keep an eye on our trade ideas probably tomorrow. We'll wait and see what happens here, but 63, 67. Pretty doggone good area to short. Now, the only thing that blows that out of the market is going to be strikes on Iran, and I've sort of alluded to that. We're getting to that. We're definitely going to have to take a look at that here very shortly before we sign off, because that is the market driver. Well, here we go. Let's just look at it right now. This is key. This is Polymarket. This is the biggest political prognostication website really on the internet here. These markets are huge. They're prediction markets, so you buy shares of things trying to predict what's going to happen. Okay. This is you click on Iran. Iran's got its own little thing. It's got its own portal. Everybody's trying to predict exactly when the next U.S. strike's going to come. Now, this is interesting to me because if you click U.S. strikes Iran by something like this, you've got all the way up to June 30th. Take a look, January 14th. Those are going for about 25 cents. So they're still active, about a 4-to-1 chance that we strike today. Tomorrow is 50. Those are going for 50 cents. How about January 16th, Friday, 56? So essentially, there is a tremendous amount of people that believe in the next 24 to 48 hours, you're going to get a strike on Iran. Take a look at January 17th, something like this. Okay, now it starts buy yes, 65%. January 18th, buy yes, 72%. January 23rd, buy yes. What I'm trying to tell you is this. Going into this weekend, the 17th and the 18th, I would be very, very, very interested in how these markets react potentially to strikes by the United States on Iran. No question about it. That's one thing that can derail this trade. So I think that if you get this trade without any news events, you can step up and take the short. If there is an aggressive kinetic strike on Iran by the United States, this could easily move right up here to 68.98. Now, nobody really believes that it's going to be boots on the ground. They probably believe it's going to be another decapitation strike, the idea being airstrikes that are supposed to really take the killing of the protesters off the board for leadership there. What is a regime? We talk about regime change a lot on this live stream because we're looking at it in Venezuela. We're also looking at it potentially in Iran. What is a regime? A regime's not just the leader. A regime's not just the president or the king or the dictator or whatever. It's not what it is. The regime in Iran isn't just the Ayatollah. What the regime is the leadership, the head, all the advisors around that, all the military support beneath that, and all the bureaucrats that are related to enforcing the regime's policies. That's what a regime is. When you talk about regime change, what does a decapitation strike really do? Meaning, if you hit the rulers or the leaders of these regimes, does it change anything? And the answer is no, it doesn't. Somebody steps right up and they just keep going with business as usual. In order to change a regime, it all has to crumble. Now, we're seeing sort of a little bit of that in Venezuela. The United States believes they can deal with the new regime, but it's not a new regime. It's the same as it was. You took the leader out, and the vice president stepped in, and everybody's still intact there. In Iran, it's going to work much the same way. As far as the mullahs go, do they actually leave? Does everybody leave? The answer to that's probably not. So when we look at WTI crude oil, and we're thinking regime change in Iran, if it is pulled off successfully and if it does occur, it's a long-term bearish market driver for WTI crude oil. There's no question about that. You're going to see more Iranian oil hit the global markets. You're going to see the Strait of Hormuz be secured, probably by international forces. There will be a security presence in the strait, and that shipping lane will stay open. But how long does the regime change take? How sticky does it get? What happens? Nobody knows that. That's why the potential for WTI to explode north is very, very real. And we understand that. So even though we're looking at bearish crude oil over the next 3 to 6 months, right now we have to be wary of the top side of this market. But it's not good enough to buy it, because if these things don't come to pass, and the United States has been pretty tight-lipped about strikes, surgical strikes, if they don't come to pass, then you will see the bears step in and sell off big. So the questions now really become, how do we trade it? We fall back on our technicals. We practice rigid, aggressive risk management, and we take care of our money while looking to capitalize. That's what we can do. And to be honest with you, it's a pretty good recipe for success. What you don't want to do is just sell this thing going, well, Shane says sell it, so sell it. And then you get a big key event like that just shake the foundations of the commodity markets, and we're sitting here, we're left talking to ourselves. You don't want to do that. So we're definitely watching the U.S. strikes. We're watching those markets as well. A couple other things for the U.S. dollar as well that we do need to cover. I do want to get right out to silver, though, because silver has absolutely exploded to the top side. We've got some questions here in the live chat. I know I get a little bit behind, but some of these concepts are a bit advanced, and I want to give you guys sort of the context for what we're trying to get accomplished in the markets this year. If you can understand how to read the news and be critical and do all the different things that you need to do to be a trader, not necessarily to capitalize, but to keep your money out of trouble. That's what I'm talking about when I'm talking about no fundamentals and understand the news. Stay out of trouble. You don't need to predict when the strike is coming and hit it perfectly and make a fortune on a spike in WTI crude that may only last a few hours. You don't need to do that. What you need to do is make sure that you're not short during one of those periods. And if you are holding shorts, that you at least put a tourniquet on it and cut the loss off before it gets devastating. That's it. That's what we're talking about when we're talking about fundamentals. All right, let's see. All right, T. Marina, so what's the difference between trading natural gas versus gasoline? What impacts the price one over the other? Gasoline's a refined fuel, meaning it shows the high correlation to the price of crude oil. Natural gas is different. Natural gas is its own commodity. When you frack, when you get a fracking well going, you just build natural gas wells. So natural gas is piped, to your houses, and those. Oh man, it used to be. They said it was going to be free, basically, and it's so expensive now. But the natural gas is in itself its own commodity. So when we're talking about commodities, we're talking about energies. Natural gas comes out of the ground as natural gas. Crude oil comes out of the ground as crude oil. Gasoline is refined crude oil. Now, a lot of people believe gasoline is a commodity. And if you go on the AI searches, I did it last night, they say gasoline is a commodity. They also say Bitcoin's a commodity. Okay, that's fine. It probably meets a lot of the terms of what a commodity needs to be. It needs to be tradable, subject to supply and demand, be able to be delivered, has a physical presence, things like that. But make no mistake, gasoline is a product. There's no question about it. It is a refined fuel. You refine crude oil to build gasoline. All different types of gasoline, all different types of crude oil. But gasoline is a product. So what I would say, T, is that natural gas is a commodity, a true commodity, out-of-the-ground commodity, and gasoline's more of a refined fuel. Now, natural gas is going to show an opposite seasonality typically to what gasoline does. In the wintertime, natural gas is going to rise. Typically, it does rise. The reason why is cold weather in the northern hemisphere, more consumption. That's really all there is to it. Supply, demand. Just to answer part of my question, let me see, Steven, the piranha. You want to see the piranha strategy? I don't know. Probably no time for the piranha today, but maybe soon. Let me see, Steven. How would Iran strike affect the Euro USD? We're getting to that. Let me see, Paca. Were you in the Army? No, I was not. I was not in the Army. My father served. My uncles, I had 2 uncles served. Father served. 2 uncles served. Both grandfathers served. Had a bunch of cousins that served. A lot of friends that served. But me personally, no, I was not in the Army. I was not in the armed forces. I went to college to play baseball instead. I was close at one point, but never did it. Got my education, went to work. So no, to answer your question, Paca, no, I wasn't. Okay, now as far as, let's see, what would an Iran strike affect the Euro USD? Interesting question. Really an interesting question. As far as what would it do to the US dollar? Well, if it looks like a global conflict, you're probably going to see people pile into the US dollar because, like we talked about yesterday, it's sort of the dog with the least amount of fleas. It's the ship with the least amount of rats. something like that. So when we look at the U.S. dollar, we would think, yeah, it's probably going to rise in a period of extended war. However, if it does look like you're going to see a little bit of economic fallout from the attack, the urge to cut interest rates to support economic growth essentially is going to weaken the dollar. So the initial stages of the attack or the strike are going to be a big deal. They're going to be a big deal. So you're going to want to watch that closely, and we're going to have that every step of the way. So it could go either way. That could go either way, Stephen. The Euro USD could either go up or it could go down. A lot of it's going to be predicated upon the size of the engagement. Are these kinetic strikes? Is this a full engagement? Will it be a prolonged event? Well, we don't know. We just don't know just yet. But we'll know. It's coming our way. We'll find out soon enough. Let me see, Stephen. No, I was answering your question about what to do in the sideways market we were looking at. Oh, gotcha. Absolutely. If you're in a sideways market, the piranha is a great strategy for sideways markets. 100%. For those of you that don't know what a piranha is, it's a strategy inside of our How to Trade trading room that's based on Bollinger Bands, and it's a basic rotation strategy. Go on to the trading room, check out the video, and you can get up and running with that in no time, realistically. Okay, let's take a look at a few other things here that we need to be focused on. Okay, the first thing, silver. I sort of put it off long enough. Here's silver. There's our daily chart. There's our cup with handle that we had built. There's your cup. There's your handle. And I mean, the market's just going to the absolute moon. One of the things that I mentioned yesterday, it was about that 90 level. I wasn't real big on 90. Let's just go ahead and put this down and dial it in and see what happened to the short-term price action right around 90. Now, typically when we have a market trending, like silver is trending to the top side, we're making all-time highs. Basically, what we're seeing right now is a revaluation in the world of finance. So we always bring this chart up. I should bring it up again right here. Let's go ahead and add my gold to my MT5 platform, and you'll see it here in a second right there at the very tippy top. Okay, so here's gold and here's silver. One thing that we pointed out, there's our cup with handle. Boom, boom, right there. There's the bullish break. You'll notice the disconnect with gold and silver, though. Silver yesterday posted a positive day. Gold was negative. A little bit of a mixed correlation. That's sort of what we're going to be seeing as we move higher and higher. Remember that gold-silver ratio. We just put the video out last week. If you haven't seen it, go check it out on over at Switch Markets. It's one of those deals where you take a look at it and you say, okay, that gold-silver ratio is coming down. Why? It doesn't mean that gold's necessarily losing any market share. It means the silver's going up faster. So right now, let's just do a quick and dirty. Our gold-silver ratio, not too long ago, it was at 100. What is it now? 50. What does that mean? It means the spread between the value of gold and the value of silver is narrowing. A lot of folks are projecting, a lot of institutional people that I've listened to, newsletters, podcasts, and things, they're calling for that gold-silver ratio to be right around 30. Does that mean gold's going to come down? No. But take a look at yesterday, just sort of did a stutter step, lost a little bit while silver's still gaining. That ratio is really coming down big. So we're looking for it to hit somewhere in the 30s. If that's the case, you're probably looking at silver up around 125. And that's if gold doesn't really do much from where it's at. We see a little bit of compression right around 46.50 in the gold market. So silver definitely rocking and rolling north. So why the angst? Why all the angst in the metals markets, aside from really being a product of geopolitical strife? Anytime you're talking war, typically metals do well. The AI boom, the conductors, the superconductors, everything that's being built for that infrastructure really does point to the need for silver, especially as a conductor. Gold, always a store of value. So if there is a war, price of gold goes up. But when else does it go up? Well, it also goes up when we see a U.S. dollar get weakened. Now, is the U.S. dollar weak right now? By my measure, not really. The dollar index is printing right around 99. So, I mean, that's relative strength, right around 100. Okay, that's doing better than I figured it would out of the gate. But what's coming? Now, we can already see what's coming right here. Why the stock market keeps shrugging. Fed's war on the Fed threatens financial stability. Trump attacks Powell again amid Fed independence, fears that jerk will be gone soon. So they're getting rid of Powell. Powell's gone. He just doesn't know it yet. Jay Powell's out of here. The next person that steps to the plate is going to be a dove, and they're going to cut interest rates more than you think, more than the markets think. That's my own read. That's my opinion. That's my analytics. We'll circle back around in Q3 to this stream on the 14th of January, and we'll say, okay, well, Shane said that they were going to cut rates, and they either will or they won't. I personally think that you're going to cut interest rates by 2 points this year, and it's going to come later in the year after the new Fed's seated. Well, this is interesting because this really does show the aggressiveness of what exactly is going to happen with your monetary policy. Neil Kashkari getting out ahead, sort of bringing his own opinion to it, something that we talk about Kashkari a lot. He's one of the most outspoken people. But what's great about Kashkari making this statement, Kashkari's always been a rate cut guy. He's always been a dove, very dovish. Even back when they were raising interest rates, he goes, "Nah, we need to be sure that economic growth is taken care of." Look at Fed's Kashkari tells the New York Times it's way too soon to cut rates. Look at this. Boom. I don't see any impetus to cut in January, adding that it was way too soon for a rate cut, which could be possible later in the year. He also goes on to say that the prosecutions or the investigation into the Fed right now by the DOJ is driven by monetary policy. They believe everybody in the Fed's sort of circling the wagons and getting in line saying, hey, listen, this investigation has to do with us not cutting rates. Well, it does. It absolutely does. If they would have cut interest rates the way the administration wanted to, you wouldn't have had an investigation. You wouldn't have had it. But it's going to be used as potentially a way to change the guard at the Fed, and that's going to be a big deal for us, especially when we're looking at our metals markets. So back to silver, right? How does all this impact silver? It does. It sort of suggests that there's going to be lower monetary policy. There's going to be reduced interest rates, and it's coming. Now, it may not be January, and it may not be in March, or maybe not even in May, but those later meetings in the year, there's probably, another 6 meetings after May? What are you going to have? June, July, and then September and October, and then December? So like 6? You can see rate cuts at each one of those, especially if a dove is elected as the Fed chair. And because the Republicans right now run Congress, at least for the time being, more than likely you're going to get that dovish Fed chief that's going to be in there for his 10-year term. That's what you're going to be looking at there. More than likely, you're going to see that. You're also going to see a changing in those FOMC members, the voting members. It's going to be big changes. We haven't even talked about the mortgage fraud allegations against one of the voting members. That's sort of been off the board for right this minute. A lot going on here, and it all points to higher, basically rising prices, especially in commodities and in gold. Silver. There it is. So if I'm trading silver right now, what am I thinking about? Let's take this right down to like a 5-minute chart and see exactly what happened at 90. I had no confidence in 90. Okay, right there, you could have stepped up and scalped and been fairly successful, but you didn't get the move, that we figured we were going to get. Look at this move. 90 right there. What's your high? 90.08. And then you're right back down. You sold off to about 89, 89.56, and now you're rocking and rolling. But take a look at the problem with this type of trading. Look at the spread on silver. Look at the spread. 547. That's crazy. It's absolutely huge. So when you're looking at a spread that big, it's not really good enough to step up and scalp. Now, you can do it in the futures market, but the margins are huge right now. You got to be very, very careful with what you do with silver. For many, it's not tradable unless you've got a CFD that's dialed in with a nice pricing structure. Something like this, though, now 90 really appears to be support. So when we take a good look at what's going on in the silver market, where do we think the next big resistance zone could be? Cup with handle, that's gone. That was the breakout. At this rate, we'll probably be printing 92. Well, we already printed at 92 and a quarter. You're probably going to go up there and look at 92.50 relatively soon. After that, it's going to be 95. So essentially what we're watching here, 95. That's the next level, 97.50. And these aren't exact. We're doing this on the fly. Something like that. And then 100. So, yeah, there are areas where silver could potentially hiccup maybe for a day or two. I do expect a little bit of compression in here. But to step up and sell into the teeth of probably one of the strongest uptrends in recent history, in recent memory, man, there's an old saying, you don't need to be a hero. Don't be a hero. You don't need to. You don't need to step up and sell and try to pick the top of the silver market. People are going to go broke doing it. Retail traders are going to be wiped out trying to pick the top or an intermediate term top of silver. Investors are going to get wiped out trying to short silver. A lot of banks have been short silver for years. Don't be surprised if we start to see some bank failures that shorted the commodities. They do a lot of things on the options markets. They sell options. They try to take shorts in the futures markets, the derivatives. They do a lot of things to try to always hedge their bets and watch their exposure. But when a market gets this out of control, and that's exactly what silver is, it's just a bullish romp. I mean, it's an absolute, they are marching north and they don't care what gets in their way. I don't know that you get in front of a trend like that, even with your key levels. It would be really easy for me to sit here and say, okay, sell 94.99s. All right, sell 97.24s. And maybe it would be successful, but we know with fairly big certainty that we're going to test 100. The real question is, where do we go after that? One thing with our new theme here of Fibonacci expansions, and then I'll cover the positions, but these Fibonaccis are interesting. To be honest with you, I've never really been a huge Fibonacci extension person, but essentially what you're doing is identifying a move, a wave, and then just assigning that golden ratio to the top side. So when you do something like this, basically you go there, and then you're going to come right back down to sort of that beginning. So the chart's going to look something like that. So your expansions, and a lot of these are what we're hearing all over the place. A lot of folks believe in Fibonacci extensions. Right there, you see we're sort of topping out right around 92.50. So like 104 is going to be a target. 123 is going to be a target. But just like we saw on that S&P 500 chart, this one right here, don't ignore the key levels. Key level 7,000 there. Key level here, probably going to be 100. Be watching for 100. I have no problem scalping in front of 100. I think that's a high-impact scalp, a very high-probability trade. But once we do break 100, then we start looking at things like this, and just, off the top of my head, without your Fibonacci expansion tool for guidance, I'm up there like at 125, somewhere up in that zone. That's more along the lines of what I'm thinking potentially for silver, and that's a long ways away. Do we get that this year? I don't know. That's another 30%. That would be a big gain. At some point, these metals markets will pull back. There's no question. We just have to be very, very cognizant about what's happening. And right now, I mean, this thing is just an absolute light show to the top side. That's why the margins have been raised. That's why everybody's really being very skittish about silver, because if you do break and you do blow high up over 100, I mean, right now there's no rules. I think we're going to see buyers and sellers dig in between 95 and 100. I do believe that. If they don't, then we're seeing you're already seeing a fundamental shift in asset valuation. But if you don't see compression between 95 and 100, 200, 300, who knows? Who knows? So buckle up. It's going to be a lot of fun. This year's going to be a lot of fun. All right, we got a few other questions here. Let me see. Paca, is it true that gold moves in price ranges of 5? Not that I know of. Let me see. Gold futures are they move in 10-cent intervals. So like if we were looking at gold futures, you'd be looking at something like this. And essentially what that is a 10-cent interval. So you've got thousands, hundreds, dollars, and then you'll notice a tick size typically is 0.1. So that would be 10 cents. As far as what we have here on your spot gold, I believe that just moves by the cent, by the penny. So right now you're looking at 56, essentially a 56 cent spread, which is significant. So if you're trading gold right now, 30-minute chart, what do we have? Interesting. This is pure price action, nothing else to it. Opening bell, ding, ding. So let's go ahead and highlight the New York session. Okay, that's the New York session. So you're sort of trying to bang higher and break out of this on the U.S. type of side of things. Rotational market, no question about it. We're up 1%, but it really did come during that overnight right in here. That's when you got your rally. As far as what we could expect out of gold later today, it's going to dry up a little bit. Something like this could be significant. Maybe a spike low right up there to that high. You'd be looking maybe a bid somewhere in this zone, 38%, but it's rotational. So I'd be very, very careful if I did anything. I'd probably want to buy in at a much better deal, maybe 62%. Not really a trend. You've got a 90-minute sort of move higher, but it's not a trend. It's not a trend. So intraday trading gold, I would be very careful. You want to make your mistakes to the long, though. I would much rather be long than short. I think that following trends is a good way to keep your money, preserve your capital. So not that I know of, Paca. Is it true gold moves in price ranges of 5? Not that I know of. Not that I know of. Unless maybe you're talking about Elliott wave. If you're talking about Elliott wave, then yeah, you're talking about 1s, 2s, 3s, 4s, and 5s. 1s, 3s, and 5s move. 2s and 4s are retracements. So if you're talking about Elliott wave, yeah, price ranges of 5, not pricing. Yeah, price ranges of 5, absolutely. So your Elliott wave would, you basically just ignore all that. Your Elliott wave would look something like this. So like there would be your 1. There's your 2, there's your 3, there's your 4, there's your 5. Now, it's not just local to gold. I mean, that's pretty much for all markets. That's the Elliott wave, essentially. 1, there's a directional move. 2 is a pullback. 3 is a directional move. 4 is a pullback. 5 is a directional move, something like that. So if you were going to break if you're going to break that down on your chart, what could you really say about it? Just to sort of follow a move. It really breaks down and gets tough on 30-minute charts because it flattens out. But essentially, this is probably down here. Behind my picture would be your compression zone. So that would be your 1. There's your 2. There's a big 3. Your 4 is not really great. I mean, you could say that maybe that's your pullback. And then maybe there's your 5. And then at that point, you're resetting. And then you're looking for the next leg up. So then you probably would have started there. But a lot of folks believe in Elliott wave. A lot of folks don't. It can be very complicated and a tough way to trade. If you're interested, though, we did some material on Elliott wave over at Forex Signals TV on YouTube. Be sure to check that out. Yeah, Paca, if you're talking about Elliott wave, then yeah, sets of 5. All you got to know is this: 1s, 3s, and 5s are movers, 2s and 4s are retracements. All right, everybody, I've gone on for about an hour. If you have any questions at all, head on over to howtotrade.com. Sign up for your free account. Send me a private message. I'll be sure to get back to you. Here's your switch markets. If you need a broker, if you're looking to change for the new year, or if you're just starting out, demo accounts are great. Open a demo account, begin practicing. It's been recognized, it's regulated, very easy, and they got a full-time support team over there. You just go click this button right there in your live support, and you can get on a live chat with somebody right away. All right, everybody, I want to thank you for joining me today. Have a fantastic trading day. All eyes are on the Iranian situation right now. If there is a strike, expect a bullish bump in WTI crude, and that selling area that we highlighted somewhere right up around 63, 67, 63.50. That could be pretty good later maybe during the U.S. overnight. But watching this market closely, because to me that's the one that's really going to be impacted by anything that happens in Iran. All right, everybody, have a fantastic trading day. If you need anything, I'm over at How to Trade. Send me a PM. I'm more than happy to reach out. Big year, big week, big day. One big day right after another. This has been a very, very, really strong start to the trading year. I'm excited for what's going to be in front of us in the next 12 months. A lot of opportunities. It's going to be truly a great time to be in the market. So if you're just starting out and you're learning, you picked a hell of a time to start learning. We'll be here every step of the way. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.